Good day, family. Welcome back to this new video, and it is your boy once again, Legend Paul. So, guys, I'm very much sorry about this video coming too late. The thing is, I'm a bit busy with a new project, and I'm also busy with creating something for you guys because I've had a lot of requests of people wanting my teachings or the course, or I can say a better advanced knowledge. Okay, so I was a bit busy with creating the boot camp, and I'm also still busy. And yeah, so guys, I was a bit busy, but this video will cover everything up for y'all, and it will be something awesome for y'all to learn. Okay, so as you saw the title, this is the scalping strategy. It's one of the best strategies that I've used for a long time, and I'm still using. I don't want to make this video too long, guys. I don't want to make this video too long. And by the way, as I'm speaking, please don't forget to hit the subscribe button, and also please give this video a thumbs up. Don't forget to share it with your friends and family. And again, please watch the previous video, because now I'm about to show you a picture of a screenshot of the trade that I took. Okay, of the trade I took from the previous analysis. Okay, so just to show you how the strategy works and all those kind of stuff. Yeah, I think it's from the previous video. I'll just put it over here, guys. So guys, we are back. I hope you saw the screenshot, and please watch that video if you didn't watch it. If you watched it, you can see that it played out very well, and as you anticipated, it played out that well. So guys, as you can see on the screen over here, we have direction or structure. It's number 1. Number 2 is zone of interest. Number 3 is execution. Okay, so what I've learned throughout my journey and from the past few weeks of me being actually silent on Instagram and on social media, I was just getting back actually to the drawing board, okay, to see of what I can improve and of what I learned. And to it's not all about securing a bigger risk reward, because one thing I've seen about this is chasing big risk reward trades. Okay, chasing big risk reward trade has actually a low win rate. It is a low win rate. Like, we're looking at a matter of fact that you find that for you to catch a trade with a big risk reward, it's a bit hard. Okay, it's a bit hard. It needs you to spend more time on the market. It needs your patience, because sometimes you find yourself in a situation whereas you just wanna enter a trade because it's been a long time you have not been entering a trade. So those are emotions triggering you. Find like a fear of missing out. Okay, like just a lot of things. So it's just a lot that I've seen with the matter of fact, because social media is actually portrayed something of securing a big risk reward trading institution, and it's not all about that, guys. You must look at your win rate, you must look at your consistency and all. So I figured out something like this, which I will not go into depth, because this is one of the topics that will be mentioned in the boot camp. It's just something for you to hold on to. Okay, to hold on to. So it's a scalping strategy. It's a scalping strategy. We are not going to go onto bigger stuff or onto you spending a lot of time looking for great setups, looking onto grabbing a high risk reward, doing all those tight stop losses, because I find people fighting for 2 pips. It's not a matter when you're trading institutional trading, basically your stop loss must be 2 pips. No, you must just go with your risk. As long as you are risking a maximum of 1% of your account, then you are good, you are perfect. There's no need of you fighting for a small stop loss, knowing that the market is just going to take your stop loss and just take it as it's losses, but your win rate it's too low. Okay, your win rate is too low, so you're not fighting for that. So guys, as you can see, we have direction, we have zone of interest, we have execution. I believe that all strategies must have all these. Okay, which this is structure. The first one is structure. We're speaking about let's just get into here. When we're speaking of structure, we're speaking about something like this. Okay, we're speaking of this. So okay guys, let's continue this one. Okay, when we're speaking of structure, we're speaking about something like this, guys. So let's just do a saw one. So when we're speaking about structure, guys, we're speaking about something like this. Okay, when we're speaking about structure, we're speaking about something like this, whereas over here it's a bullish momentum, and over here it's a bearish momentum. And as you can see, over here we have some higher highs, higher lows, higher high, higher low, and higher high. Over here we have somewhat lower high, lower low, lower high, lower low, lower high, and lower low. So one thing again that I did not tell you is that we cannot, as you can see, this is our higher low, higher high, higher low, higher high. We can't say this is a higher low if there is no higher high. Okay, we can't say this is a higher low if there is no a higher high. So for here to be a higher low, there must first be a higher high, and for the market to have a higher high, it must break the previous structure, which is this one. So here we have a break of structure to the upside. Immediately after the break of structure to the upside, we require this as a higher high. Okay, so over here we cannot say it's a higher low without seeing that the market is giving us a higher high, or the market is breaking this previous level. Okay, so what we have over here is we're going to use trend lines. I'm not from my previous videos, I was a retail trader. Okay, I was a retail trader, and I still sometimes use some confirmations of retail, but also here I'm going to use a bit of trend lines. I know when I say trend lines, some people are just being like, no, we're not interested. But hold on, wherever you are, just hold on. What I'm about to show you now is something awesome. It's not all about patterns, it's not all about all those retail stuff. It's something else, something which is something huge. Okay, so before I can go to that, let's just go to number 2. Okay, number 2 is all about speaking about zone of interest. Okay, we're speaking about zone of interest. When we speak of zone of interest, we're speaking about, let's just name them over here. We're speaking about supply and demand. Okay, speaking about supply and demand, we're speaking about institutional candles, which institutional candles, which are order blocks. Okay, order blocks, and also imbalances, at least, and also imbalances, which are the most ones that we are going to be at least focusing on. And we have it, and also we have support and resistance. Okay, this is what I require as this zone of interest. Okay, this is zone of interest. We are not going to focus on support and resistance. No, that one is something else. We are not going to focus on support and resistance. Supply and demand, we are also going to focus on it, but not on that deeper level. This is something that will be offered in the bootcamp. Now we're going to speak about other blocks and also imbalances. Okay, so when we speak of zone of interest, we're speaking of those kind of stuff. Those kind of stuff are the things that moves the market. I don't know if you understand me, but for the market to move, there must be a zone of interest that push that market to reach that direction, or the market to go onto that direction, there must be a zone of interest. Okay, so we first started with direction and with structure, then we move on to zone of interest, which is what moves the market also. Okay, which is one of the things which moves the market. Then we go to number 3. Number 3 is all about execution, knowing your entry types, getting the right entry, and checking everything that it's correct. Okay, so we have all of this 3 stuff. So okay, direction, zone of interest, and also execution. Okay, so this is a step-by-step process. So first things first, what we're going to do is we are first going to have our highs, higher highs and higher lows. Okay, we're going to look at the current structure. This time we'll be focusing on at least M5 time frame. Okay, M5 time frame, M3 time frame, and also M1 time frame. Just the lower time frames from M5, but you can also at least take it a bit up with a bit of M50 if you like. And it depends on how you see the market with this strategy, because it works also on higher time frames. It's just that in that part we're just going to add more stuff, because the more we extend our time frames is the more the context. I don't know if you get me. The more we extend our time frame is the more we're going to do to extend our context. Okay, so the context is just going to be more, which means there will be even more confirmations. So now we're going to look at the current structure. So we're saying that this is a current structure. We're looking at a current structure, and as we're looking at this current structure, we have a higher low, a higher high, a higher low, a higher high, and a higher low. Okay, then also over here we have a higher high. So we have these 2 touches over here. Okay, we have these 2 touches over here. Okay, so what the market can do from now on is, it's either the market is going to, from that point, is going to come over here, then go up. Okay, or as I was saying, it's either the market is going to come over to this point, then shoot up, okay, so or the market is going to come to this point and break, okay, and break this line and break this trend line. Okay, so what are you going to wait for? We're not going to wait for the market. We're not going to go with the effect of the market coming to this point and going up. We want a break of this trend line. Okay, so basically just going to wait for 2 touches. In a buying scenario, we're waiting for a higher low and 2 higher lows. Basically, in a buying scenario, in a bullish momentum scenario, current structure, we are waiting for 2 previous higher lows. Okay, first one, second one. On the third one, it's either the market is going to come over here and go up, or the market is just going to break. So as the market is going to break right over here, as the market is going to retest, the market is just going to leave us a zone of interest. It's either it's going to be an imbalance, it's either it's going to be an order block, or it's either it's going to be a supply and a demand. So over here, when the market comes and retests, there will be a point of interest, which which we can call it a zone of interest. So what we're going to wait for? We're going to wait for the market. Let's just use that tool again. So what we're going to wait for? We're going to wait for the market to come back and retest. As the market is retesting, that's where we're going to enter our trade to the downside. Okay, let's just do this. Okay, let's just move our right over here. We're going to have some sort of a zone of interest, and as the market comes to the zone of interest, that's where we're going to take our trades. Then our target can we take our trades from over this point, then our stop loss should be a bit more higher, at least over here, at least 2 pips upwards, let's see if it's over here. Okay, it's 2, so at least 4. Okay, 2 pips to the upside, at least 2 pips to the upside extra, then our first target must be on this point, okay, which is a 1:88 risk ratio. It's a good trade, guys. It's a very good scalp trade. Our second take profit should be on our second level, which will be 2:40. Then our last target will be over here, which will be 1:5 with a 20.5 pips. Okay, so per day you're going to take at least about 5 trades. Okay, per day you're going to take at least about 5 trades. So this is how it is. Okay, in a bearish scenario, let's just first speak about the bearish scenario. As you can see over here, we have some lower high, lower low, lower high, lower low, lower high, and a lower low. Okay, for the market to have a lower high, it must first have what? A lower low. So before it can break this strike, if it haven't broke this structure, then this is not a lower high. Okay, so we're going to place our strategy. We're going to place our trend line on the first 2 structures. Okay, on the first 2 structures. So there is a possibility that the market can come to this part, okay, and then go down and create another lower low. Or the market can do this, or the market can do the following, can break. Okay, the market can break structure. So what we're going to wait for, we're going to wait for the market to break structure. Okay, we're going to wait for the market to break structure, then come back to mitigate our zone of interest. Our zone of interest, you might find that it's lying just where the market is going to come and retest the trend line. Okay, so we're expecting the market to do some sort of, so we will be expecting the market to come to this point, go to the upside, okay, then go to the upside. So that's what we are actually expecting from the market. So we're taking our trade from just around over here. It's a 2.2 pip stop loss, so we're going to do at least a 4, extending it with another 2 pips. It's a 4.2 at least. First take profit will be just over around here, 1:3 risk ratio. Second will be over here, okay, 1:54, 4.54 pips. Okay, so this is actually how our scalping strategy will be working. Okay, this is how it will be working. So surely I've been speaking for a long time. Let's just get to the raw charts. We are on GBP JPY. So guys, if you are not very good with higher highs and high lows, there is an indicator in TradingView. It's called, just type higher high, and you find this one, the first one, higher high, lower low strategy with source whatsoever. Then you're going to use it. Then when it reaches here, it will be a bit messy. Then go to the settings. It will be a bit messy. Go to the settings, rub out all the kind of messy stuff, you know, some show support and resistance rabbit, rub also change back color rabbit. And when it comes to left bars, type 5, on right bars, type 4. Then say okay, this will appear. I like it in this color. You can also change your colors of the higher highs and higher lows. It's not a problem. That one you can just play around with the colors, whichever one suits you. Okay, so let's just start with, let's just see. Okay, let's just see. I'll start with this one. I'll start with the current market, the one which I can see. Okay, we can see that we had a bearish momentum, then also a high low, a higher high, a higher low, a higher high, a higher low, a higher high. What do we want? We want 2 higher lows. Okay, we want 2 higher lows. So what we're going to do is start our trend line on this higher low and take it to the next higher low, connect it with the next higher low, and wait for the market to do it. We wait for the market to break structure. Okay, we'll use, yeah, it must come over here. It must be over here. Perfect. So our first touch, our second touch, on the third one, it's either the market must come down and go up, or the market will break. So the market broke structure. So now what are we going to be looking at? We're going to look at our zone of interest. And as you can see, the market went down. Our zone of interest is this one with the long wick. But what we're going to do is, we're not just going to, you can also do it like this. You can also do it like this, the full zone as a whole. But I prefer at least doing it a bit like this, where the candle is only. Okay, then you wait for the market to get down and come and mitigate. Look at how accurately the market came and mitigated. Then we take our trade from here, exactly from here. Then let's see how much is our stop loss. Is 0.8. Let's just take it to 2.8 or something. Yeah, okay, it's okay on 2. Okay, 2 pips stop loss, 2 pips stop loss. Our first take profit must be over here. Our first take profit must be over here, which is how much? 2.65. 2.65 is our first take profit. Don't forget, it's a scalp trade. If we can look at it, it only took us about 21 minutes for the market to hit our first take profit. 21 minutes is less than 30 minutes. Imagine. Then our second take profit will be around here, which is our final take profit with a 1:5 risk ratio. It's 6.9 take profit. Let's just see how much this one took us to reach our final take profit. It took us only 30 minutes. Imagine that, 30 minutes to hit our take profit, to give us 1:5 risk ratio. It took us only 30 minutes. So let's just look for more opportunities. Don't forget, this strategy is not 100% all accurate. There's no strategy which is 100% working. Okay, there's no strategy which is 100% working. Okay guys, we have another one. As you can see, the market was a bearish scenario. Then over here we have our higher low, we have our higher high, our higher low, and our higher high. Don't forget, we need only 2 higher lows, and you must have a bit of knowledge of higher highs and higher lows, because as you can see, on this scenario they only gave us this one, but they did not give us this higher low. Okay, so yeah, so you must have a knowledge, but this one was a bit obvious, guys. Everyone could see it. Okay, then on this scenario, as I can see, we have an imbalance. On this one we have an imbalance. Okay, as you can see, we have a void to fill over here. So we're going to draw our zone on the void that we have. So we have 2 voids. You can take this void, the first one. I would have taken the first void, then to take the second one, because we're looking at the current stuff, not the bigger one. Because if we would have been looking at this one, why don't we look at the other block of this one? So we're looking at the one near the trend line. Okay, and surely even on the side we have something, guys. Even if it was not of that void, but over here we have an other block. On this side we have an other block. Let's just change this to 50%. Okay, even on this part, guys, let's see. You can see, even on this part we have an other block. Which confirms why the market supported this other part, and it mitigated the 50% of it. So on this one, we would have taken our trades from over here, and let's see the original stop loss 3.2. so our stop loss will be at least 5. Perfect. Perfect stop loss over there. Then I wouldn't put my take profit over here, but as long as it's 1:1, yeah, at least if my stop loss is less, it's just going to be 1:1 risk reward. Okay, it's just going to be 1:1. Then but our final take profit must be over here, which will give us 1:2 risk ratio and target hit. Okay, as you can see, target hit. Let's see how long did it take to reach our target. Okay, it only took us 1 hour, which is not a lot, which is not a lot to it's not a lot of time. It's for 1:2 risk ratio. It was just an in and out thing. Okay guys, we have another example, but this one it's a bit tight. It's a bit tight, and this one needs you to be at least a bit advanced in this strategy. Okay, as you can see, we had a bearish momentum, and over here we have our first higher low. Then the market went up, creating a higher high, another higher low. Then the market shot up. Okay, so on this part, the indicator didn't show us, but it needs your knowledge. So as you can see, the market went up, it broke over here. Then now we look for our zone, and our zone will be between these two. Okay, yeah, it can be over here, our zone, and over here we're just going to take the 50% of the candle. So we're just gonna do this. Over here we're just going to take a bit of 50% of the zone, and place our trades on the 50%, because the other block is a bit huge. Okay, then our stop loss will be around 6 pips. Yes, our stop loss will be 6 pips. On this one, it did not hit our final take profit, but it hit this second one, because our first one must be over here. Okay, securing 1:66 risk ratio, it's really good. Our second one should be over here with a 1:4,16, and our third one should be over here with a 1:5. So we secured only our first and our second one, and let's just see how long it took us. So from our trade to our take profit, it only took us 21 minutes, guys, less than 30 minutes. We in and out. Okay, let's just do this. This is our first trade. We secured all of how much? Okay, let's do this. So over here we secured 4:2. Okay, so over here it's actually 9. Okay, it's 9. So it's a 1:9 risk ratio. I mean, it's 3:9. Yeah, 3:9 risk ratio in about 2 hours on only GBP JPY, and only 1 day. Okay, so I want to go, let's just see one last example. But as you can see, you saw guys. Okay guys, this is our last example. As you can see over here, with our higher low, and another higher low is over here. Over here we have another higher low. So as you can see, first one, second touch went up, and the market broke over here. And so now we're looking for our zone of interest. So our zone of interest is inside, it's over here. As you can see, this is our zone of interest. So on these situations, this is why we extend our stop loss, because of manipulations, and because we're looking at liquidity. So the challenges that you're going to come across in the strategy will be of liquidity and also manipulations, because you are on the smaller time frame, and this is scalping. That's why I always extend my take profit, my stop loss, I mean. So over here we would have taken this trade from this point. Okay, this is a big other block. It's either you take the 50% or this one, but most of the time you will be a bit wanna be on a safe side. So saying that this is our stop loss, our original stop loss, then it's on 5, so we must put our stop loss extra 2 pips, which is 7. 7 is okay. So it would the week would have hidden our stop loss. The week would have hidden our stop loss, unless if you were lucky and your stop loss was about 8 pips, 9 pips, 10 pips. Then if maybe it had not eaten our stop loss, our first take profit would have been here, securing 1:18 risk ratio. Okay, yeah, it's 1:20 actually. Then our second take profit would have actually been here with 1:66. Okay, and it would have even taken us a short time to reach that point. Okay, it would have even taken us a short time because it's over here where we took our trade. Okay, yeah, it's only 15 minutes 15 minutes for that trade. And if you can check our sessions, you see this was on the London session, but this was not a manipulation. As you can see over here, we have some other block, okay, a bigger other block over here. So this was not a manipulation. The market was actually mitigating that point, because over here we also have what? Over here we have a break of structure. And also what I like to do is, when the market comes to those kind of areas, I like to go to M1 time frame. Okay, M1 time frame, I look for a break of structure so that I may enter my trade. So I want to at least make an example over here, maybe what I want to show on the M1 time frame. So we'll just go to M1 time frame very fast before I end this video. Okay, we are on the M1 time frame. Let's switch off the sessions. So on the M1 time frame, we can see, no, this one hit by a week, so we couldn't say anything over here. Yeah, so let's just go on to this one. Okay, so as you can see over this one, we can see that the market over here, let's just remove this. Let's remove this. I want to show you something, guys. So the market broke and the market came into the zone where we took our trade. So mostly I like to do a confirmation of this one. I like to take my trade after this break of structure. You see, this small break of structures, I like to take my trades. Then after this rejection candle of the direction I'm taking, that's where I take my trade. Then let me show you. The zone was just sitting over here, guys. The zone was just sitting over here. We look for a break of structure on the M1 time frame, then I take my trade from over here. Okay, I take my trade from over there. Then now my stop loss can even be a bit lower, because I now have a better confirmation. My stop loss can be over here, 1:7. Then my take profit over here, my take profit over here, securing how much? 1:6 risk ratio. So it's something, it's a confirmation, then putting our stop loss over here, securing 1:2. So these are some of the confirmations that I use. I normally go to the 1 hour time frame to get those break of structures. Let's just see this one. There must be a break of structure, because that other one I couldn't make an example because it was a sniper trade. That one was a sniper trade. You see on the M1 time frame, we also have another other block. So I would have taken my trade after I seen this. As you can see, the market broke, the market went into the zone. Immediately when it goes into the zone, I look for a previous structures like this, so that I can wait for the market to come back and break the structure, then I'll take my trade. So okay, the market broke structure over here and it went a bit over here. So I would have taken my trade at least, let's see, yeah, on this trade, on this candle, I would have taken my trade on this candle. So I look for rejection candles with the color of the direction that I'm taking, like rejection candles like this. Another rejection candle, it was this one. You saw it, it was that one. Okay, so I would have taken my trade from the with the confirmation of the M1 time frame. Then my stop loss would have even been much smaller, because I have a better confirmation. My stop loss can even be over here, or my stop loss can be also over here. Okay, so saying that it was there, then I know that my take profit my first take profit would have been securing, I would have been securing 1:8, with the second one 1:30. So guys, this strategy, I know it will help you a lot, guys, if you apply it the right way. And it is your boy once again, Legit Paul. I've released such much powerful knowledge today, but it's for an apology of where I've been away so much time. So this must be a must watch. Please share it with the friends and family. This will help you a lot, and you can see the power of it. Okay, nothing a lot, nothing so special. It's just something which is normal, guys. Something which is normal. Okay, yeah, nothing that is very hard, that is hard to master. Okay, just work with this. Have a trading plan. The most important thing. This strategy must not fool you to a point where you wanna take every opportunity on the market. As you can see, the first thing is direction, structure. You look at the current structure, then you look at the first two structures. Over here we're going to look for higher lows, higher lows. Over here we're going to look for lower highs, lower highs. Then you're going to look for a zone of interest over here. Then you're going to execute the trade. Okay, then your take profit must be according to the structures. Okay, so don't forget to the subscribe button. Please give this video a thumbs up and comment down below and tell me what you think about this video. Share it with your friends and family. This was an awesome session with you guys. Okay, please, let's take this video to many more heights. Let's take this video to at least 500 views. Okay, to at least 500 views. Please guys, this will be the highest view video if it's on 500, because the highest one currently is about 450 views. So let's do the most, guys. Thank you very much. I love you. It is all from me, Legit Paul. I'm signing out. Yes sir.